This is Agriculture Today. We are back now for our weekly grain market update. And joining us, as always, for that is K-State grain economist Dan O'Brien. So, Dan, thanks for joining us.
Thank you, Samantha.
Absolutely. So let's start, as we always do, futures and corn prices, or in cash prices. What have we really seen?
Well, the markets have been in the doldrums if you're talking about corn futures and wheat futures, they've been in the doldrums, been trending down. The close yesterday for March corn, now the lead contract, it's not in a delivery period, was 642.5, still a great price. Actually up 1.25 cents. New crop Dees 23 at 594, down 1.75 cents. So not a lot of change yesterday, but the recent trend's been down 20, 30, 40 cents. Not encouraging in any way for farmers that are still holding grain. For wheat, hard red winter wheat's really been moving downward to the low side. Closed yesterday at 860.5, down 4 cents. Had been up to say 950, 970 or so. So anybody holding old crop wheat is wondering about all that too. There are a number of factors, including lots of sales out of the Russia-Ukraine area. Russia has a lot of wheat right now. There's some argument over where they got it, but it's still there's still that issue. But yet they have a lot of wheat to sell. The world needs the wheat, so it's getting to where it needs to be, I guess. Soybeans are a bit different. We've had such strength in soybean meal crush, with one of the factors being the need for renewable biodiesel and soybean oil. So we've been crushing soybean meal at strong paces. That's supported the soybean market. And so you've seen soybeans actually were up 14 cents yesterday, up to 14.86 1/4, and that's the highest it's been in a couple 2-3 weeks. So soybeans standing out differently for sure, and a lot of it having to do with the I guess the fuel aspect and the need for renewable biodiesel to come in and bolster the regular biodiesel supply demand balance. In essence, the more biodiesel we bring into that equation, the more reasonable blended diesel prices are for U.S. consumers, and that's kind of where all that is heading off into. And I would add in on the cash market side that at the ethanol plants, Kansas still stands out. We have a average corn price at our ethanol plants of $7.45, a range 706 to about 766, and there's no other state on yesterday. Well, the only other state that comes close is Nebraska at 694. So we're fully 50 cents, 45, 50 cents above where any other state is at. Nebraska does have one or two high bids at 750 or so. Maybe those are the plants next to us. I'm not sure. Anyway, but the point is that still some strength there. And when you go over into the spot markets, still seeing strong basis levels. Garden City still at $1.40 over. The best bid that we could see at $7.48, and Colby area 106 over at 748. Columbus 742, again pulling down into the southeast part of the country, and positive basis 90 cents, 95 in Hutchinson, Salina to peak at 62 over. Still looking at I guess a range of 45 over to 16 over down southeast. For grain sorghum basis bids, and everything else running from 45 up to 64 over at the places that we're watching. So I would add that as Samantha, as you and I have talked about, with these strong soybean markets, there are certain parts of the state that are really participating in that. We're seeing a strong bid in Salina, in Topeka, 40 over for soybeans at 1526, 1546 in Hutchinson at 60 over. Decent bids in Columbus and Salina, about 15, 16 cents over, a little weaker out to the west. And again, strong soybean demand pulling into crush on the one hand, and perhaps being railed down to the Gulf to meet soybean export demand, given that we're struggling with barges in our river system. Both those are supporting that. Wheat, of course, struggling right now. We have had a few sales of late to be of help, but again, the high value of the U.S. dollars coming in and being a real negative factor on the wheat market. And there'll be better days ahead, no doubt. But at this time, you've got such a fire sale, which is a non-scientific term, going on out of Russia, and for what does get shipped out of Ukraine, that it's hard for these other well, for the U.S. and some other sellers to come in, especially the U.S. with, again, our currency issues.
Yeah, definitely some competition there in the wheat market right now that is good in some ways, but bad for us currently in terms of prices. Yep. So when we think globally, there's a lot going on right now, obviously, but because of that, our latest WASDE report is really significant. So let's talk through some of the high points of that as well.
I guess the key things to watch here at 11 today, when that report comes out, 11 Central, will be the ending stocks numbers domestically for the U.S. In the November report, WASDE report, the USDA projected ending stocks for U.S. corn for this marketing year on August 31st of 2023 at 1.182 billion bushels. The pre-report estimate for tomorrow, for today here at 11 o'clock is 1.241. So about 60 million bushels more, and that's probably thought to come mainly from lowered exports. Again, we've been struggling for corn for exports, perhaps some adjustments in the biofuel ethanol side. We'll see. For soybeans, not a lot of changes expected. Again, somewhat a little bit lower usage for exports, probably, although crush is doing great. Still probably lower exports, about 236 million projected for soybean ending stocks, up from about 220 in November. We'll see. And a small change, a little bit higher wheat ending stocks projection, 578 million bushels versus just up basically 7 from before. So I guess the surprise in those markets would be is if there's anything that really stands out beyond the expectations of weak exports for corn and for wheat, and perhaps even stronger crush or something like that coming in on the demand side, that would keep soybeans at about the same stocks as they were coming out of November.
Sure. Yeah. Something we'll look to cover and talk about more, I'm sure, in the coming weeks or so. And then globally, we've also, like I said, quite a few issues going on, and some of them, having to deal with us here in the U.S. We've got a little bit of conflict going on with Mexico in terms of GMOs.
Yes. The Mexican government leadership at the very top, at their president level, had come out at the end of November and, in essence, indicated to the United States that they were seeking to not import any more GMO corn in. Well, this is a big issue within their country. They had a debate, and we surely had a debate with them with regard to how their livestock sector would need GMO corn to keep functioning. So since that time, there's been some negotiation where now that the statement has been made by the Mexican government that the non-GMO label would only account for food-based corn brought in, but yet I guess what could very well happen is that the United States and Canada could take Mexico to the North American free trade agreement process of a complaint. Again, their thought is that, hey, this is a phytosanitary or a genetic type of a trade limitation, and I just would not be surprised if this ends up as some type of an action like that. Still, though, I think this is consistent with the general tone of the Mexico government at this time. They've also gotten involved with Europe in trying to convince Brazil not to deforest. Or pardon me, to not send them soybeans, export soybeans to either of those countries from Brazil on land that had been deforested. So that also causes all sorts of uproar. The challenge to me, I think, and I think we should be empathetic and understanding of their desires, what they're looking for, but to balance that with the real shortfalls that would happen in the short run if you just make a quick cut on that type of a non-GMO ruling, and you again if you cut off that type of corn, you really hurt their livestock industry. You hurt their ability to feed their people, in terms of their own food security and supplies. So that's certainly something to be debated, and it doesn't seem like it's anywhere near a resolution yet. You have strongly dug in parties on both sides.
Absolutely. Yeah. And you hinted at this right then too, but so Mexico and the EU have started looking at imposing sort of rules to limit Brazil's exports due to deforestation concerns. And this is at a time when Brazil has a really good crop that they're dealing with. And Argentina is kind of struggling. They've been going through somewhat of a drought like we have, really, in a lot of ways.
Argentina has really been struggling with they're behind in their planting of soybeans for sure. I think corn may be affected as well. Their wheat crop came in a little bit earlier, and it basically identified as being at the lowest level in years and years. So we're concerned about having adequate food supplies for the world, and Argentina, by the way, comes in dramatically short. So again, I guess we're pulling for the Black Sea region to continue to, in whatever way, to bring their supplies out. So big issue with South America is, again, Argentina's short. They've had their government is aiming in order to encourage trade, to generate income from that. They've given their farmers and given their export industry a break on currency values. Countries have come in, taken strong advantage of that. Now, for the second time, China apparently being one of them. And so you've got all that occurring. They're selling a lot of beans at this time, subsidized basically. Their normal mode is to sell soybean meal. So I wonder about not the upfront side, but I wonder on the back side, what are they doing to their own industry? And Argentina just has a lot of inflation and logistical issues going on right now that they're really struggling with. Brazil has their issues too. But right so far they have more rain, and they're online to have 150 to 155 million metric ton crop, and frankly, if you're pulling for world food supplies to stay at adequate levels, then we should. I guess we should be hoping for that, and I hope the farmers have an adequate price to cover their costs at the same time.
Absolutely. Yeah. Something else that we'll be following up on, I'm sure, in the coming weeks, just to see if those rules actually do get imposed and the effects of that and whatever else may come of it. But Dan, as always, thank you so much for your insight that you provided today. This has been a great conversation.
Thank you, Samantha. I appreciate it.
Absolutely. Once again, that was K-State grain economist Dan O'Brien providing this week's grain market update. We'll be back with more ahead on Agriculture Today.